Intel stock just surged almost 30% in 2 weeks. Not because they fixed their business, not because they won back share from AMD, but because their CEO visited Trump and made a friend. You see, 3 weeks ago, Trump criticized him, stock tanked. 2 weeks ago, they met, Trump praised him, stock soared. Now, SoftBank's throwing in $2 billion, and the government is going to take a stake in the failing business with our taxpayer money. Now, the stock is higher than it was before any of this drama, as if the business has suddenly changed. But here's what the herd forgot. Intel is still losing massive server share every year to AMD. In the real world, the business is not doing well. Revenues barely growing. Margins are crushed. The flywheel is broken. Now, I know some of you have heard this one before. Don't fight the tape. But contrarians like myself set up screens and wait for this trade. Let me be clear about this. This is a momentum trap in real time. And I'm about to show you how politics creates false rallies that end in disaster. Now, you can short for a quick 30+% return or avoid it altogether. Either way, you'll be equipped to identify this pattern every single time it shows up. By the way, I'm Mark Jones. During the day, I run my fund, Pragmatic Capital, where we leverage deep research to build a concentrated contrarian portfolio. But right now, I'm here to share those same contrarian insights, including the skills and mindset behind them, so you can lift the growth ceiling on your own portfolio. Okay, back to why we're here. The repeating pattern the market has shown over and over again. The market has an excitement problem. And when excitement kicks in, it doesn't think, it leaps. Euphoric, predictable, every single time. Right now, the market is intoxicated by political favor. Trump praises a CEO, stock soars. Government funding announced or potential government funding announced, valuations explode. You see, following this pattern destroys compounding year after year. The pattern never fails. The market just can't help itself. Political endorsement creates euphoria. Stock then detaches from fundamentals, the reality of the business that's been playing out in real life day after day. When reality returns or the market is back focused on reality, the stock crashes harder than it rose. It would have been better if this had never happened. You see, Intel's following the exact same playbook. Political blessing, institutional money, stock surges. But importantly, how do we know this isn't different? How do we separate real traps from turnarounds? The divergence test. And Intel's about to fail every checkpoint I'm going to give you. The first check, let's walk through this together. First check, earnings history. Intel has missed or revised guidance several times in recent quarters. They can't predict their own business even 3 months out. If leadership can't forecast their own company, how can they execute a turnaround against fierce competitors, some of the sharpest business people in the world? Second check, revenue growth. Intel just flipped positive. Barely, growing 1-ish%, while semiconductors as a whole are growing double digits. AMD's growing at 30%, Nvidia's triple digits. Intel's celebrating single digits like it's a win. The reality is this is not a victory. This is not a recovery. That's falling behind while standing still. Now let's move on to the third check, margins. You see, Intel's a manufacturing company. Lose scale and expenses spiral. You see, they have flat revenues, yet gross profit is down 30%. The gross margins over time have collapsed from a norm of 60% to 30%. That's horrible. They're literally making less money on the same sales. Now, fourth check, short interest. It's surprisingly low for a company this troubled. You'd expect heavy shorting, but it's modest. You know what that means? Even the bears are betting because of the political wild card. Here's the thing about it. That's not bullishness. That's not a bullish signal. That's greed. It's a mentality of chase it if it's working. At this point, we can see that from this test, we've got 4 tests, 4 failures. The business is deteriorating while the stock rises. You see, that divergence only resolves one way, violently downward. This cannot end well. Here's another thing. Intel has one more problem, a big problem. You see, great companies have flywheels. These are self-reinforcing cycles that build momentum. Side note, I strongly encourage you to check out Jim Collins' work on the flywheel effect. But the crux of it is this. Once a flywheel spins, it creates its own momentum. But Jim Collins' work also found doom loops exist. That's like the anti-flywheel, where each problem makes the next problem worse. You see, once a doom loop starts, it's almost impossible to escape. It's like quicksand. So the question is, can Trump's endorsement, SoftBank's $2 billion, or government support break Intel's doom loop? Well, first, let's check out what is their doom loop. They lose design wins to companies like AMD. Then you have fewer customers. That means that Intel's fabs are underutilized. Therefore, cost per chip rises. Higher costs mean worse price performance. This is really important to customers. That makes them less competitive. At that stage, partners will then prioritize AMD and Nvidia across the markets that they operate in. With shrinking share, they have less money to put back into the business to make great designs to get wins. You see, each turn makes the next turn worse. Trump praising the CEO doesn't create design wins. That's great for him on a personal level, but that doesn't create design wins for Intel as a company. Customers choose chips on performance per dollar, not presidential approval of the CEO. The CEO today and SoftBank's $2 billion, Intel can spend that in a quarter. This is a massive company. $2 billion is not going to change Intel's structure. Their fabs need volume to be competitive. They need volume to be competitive. Political money without customers just delays the inevitable. Look, we can look at the CHIPS Act, which Intel was a major beneficiary. They're laying off tens of thousands of employees even with this money. That's not recovery. That's a managed decline with government life support. Intel cannot be TSMC. It's just not going to happen. So all this government support to try to make that happen is just going to be wasted money. So in this situation, how can you detect a doom loop early? This is something that you want to be able to see within your portfolio or within a company you're considering. Maybe you think that a business is turning around. How do you assess if they have a doom loop or if they've got their flywheel back working? So you don't find yourself in a company like Intel. So what you want to do is you want to ask these 5 questions. 1, are crown jewel customers showcasing someone else? 2, is capacity running light while inventory swells? That means you have a demand problem. 3, are prices falling faster than cost? Again, you have a demand problem. Just to get anyone to buy your product, you have to lower your prices. 4, do partners optimize elsewhere first? Basically, are you getting leftover spend? And 5, are headlines and subsidies replacing actual wins, basically distractions? You see that a lot in the stock market. You see a lot of businesses that are not doing well, and you see these press announcements of developments that have nothing to do with the core business, nothing to do with what actually makes their customers want to do business with them more. It just makes people in the market want to buy their stock more. You see, if a business has 3 or more of these conditions, you're looking at a doom loop, and Intel triggers all 5. They lost Apple a few years ago, and they're losing server customers, not just in general, but also relatively. They're losing wallet share. Their fabs are underutilized. Their margins are collapsing while they're cutting prices, and developers are prioritizing Nvidia and AMD, which has long-term implications. They're building infrastructure on Nvidia and AMD. That has long-term implications. And now we have a situation where the market is celebrating political praise while the business burns. The stock's up 30% on hope. There's no way around this. And doom loops don't care about hope. They break only through restructuring or bankruptcy. Neither outcome rewards shareholders. The reality is the market just showed you both sides of the same coin. We had a situation where Monday.com and the trade desk stocks were sold based on this big tech fear, where fear creates opportunity when businesses are strong. That situation happened at the same time as we have this Intel situation, where it shows how greed creates traps when businesses are broken. Now, if you want to master this screen, I strongly encourage you to watch both analyses back to back. The pattern will then become obvious. But I'll leave you with this. Intel's rally won't last. You can quote me on that. Circle back. Quote me on that. Political theater never beats business reality. The question isn't if it crashes back to earth. That's gonna happen. It's whether you'll be safely on the sidelines when it does, or maybe cashing out a short position because you took action.